All right, good morning, everybody. Joel, let me type that into the room for you real quick. Pretty easy one. There you go. And guys, that's not just for Joel, that's for anybody. Good morning, good morning. If you need me, guys, you can always get a hold of me. Hey, good morning, Daniel. And that goes for really anybody in Nexgen. From the contact page, if you need tech support, good morning, Safia. If you need to grab a hold of one of your salespeople, if you need to grab John Novak by the lapels and give him a piece of your mind, tell him how great he's doing, and then you've got me right here, Trading Education. Guys, you're always invited to send me a message, to ask me questions, catch me on Skype. I try to keep myself pretty accessible for you guys, so don't be shy if you need something. I get a lot of emails from people saying, hey, Mark, I wrote a trading plan. What do you think? Can I get some feedback? Good morning, Dave B. I get people that say, hey, I've adjusted my plan. Hey, Mark, here's my checklist. So I want you all to feel very comfortable doing that as well. If you want to pass something along, have me review it, I always will. I'm more than glad to take the time to do that. Welcome to the education class. Welcome to a brand new week, guys. I'm excited about this week. Just got a good feeling. You know, when you wake up Monday morning, you're like, it's going to be a good week. That's where I'm at today. So you guys are going to be the victim of my very good mood. We are going to talk about rules. We're going to talk about writing a plan. I'm very excited. We're going to spend some time watching the live indicators and really just talking about what it means. I have a stack of pictures that I'll be sharing with you guys, making sure that you understand what you're looking at. But before we do anything, John with the message there. Thank you, John. Each and every morning, really the first thing I do when my charts are loading up, I've got my cup of coffee. I've already set up my computer to get going. I go to forexfactory.com, and all I'm doing is I'm looking to see if there's any news releases that may move that market a little crazy. There's a lot of deep pockets guys that they wait for these releases, whether it's positive or negative. They have a strategy based around what the news is going to be. So what they do is, let's say there's bad news, they dump their position. The market moves erratically. For those of us that aren't market movers, we're smaller fish in the pond, trading patterns, trading that predictability. It can affect the market, make it move adverse, maybe jump against you, spike you out, all that good stuff. So looking for news, looking for high impact, looking for low impact, looking for medium impact, and just being aware of what time those releases come so that we can stay out of the way if people decide to get a little crazy on it. And then everything that I talk about really comes from two places. The first place is the nexgen-t3.com education page. And I'm going to click on the software user guide. The software user guide is your NinjaTrader how-to. This is where you are going to be able to really have a one-click answer to questions you may have about NinjaTrader. Whether it is setting up your computer for high performance, opening NinjaTrader, connecting to data, opening a workspace, making sure that you're comfortable scaling a workspace, adding in stops and targets. There's a section on here if you like to change the look of your triggers. Maybe you don't care for the colors. I've actually had a couple clients that are colorblind and they've changed it to make it easier for them visually. There's also a section on rolling contracts when it's time to roll contracts, adding or changing those synthetic triggers, decreasing the size, deleting old charts, starting fresh. I do this every weekend. If you were with me on Friday, I said you should give it a go. If you did it, let me know how it went for you. If you need help, let me know. And then from this Nexgen user guide, I think probably the most important thing is utilizing this screen capture program, guys. This TechSmith Capture this is how you and I have a conversation throughout the day. This is really our portal to one another, and it's a pretty simple process. It's just a big red button that says capture. When you click on that capture button, you can hover over one chart, get just one chart. But what we like to do for class, and this is pretty important, is just left click at the upper left hand side of your screen. Pull it all the way down to the right. Make sure that you get those timestamps in there so I can line up your spot. And then when you release, it's going to let you take a picture with that camera and give you what's called an image preview. And this is where you and I are going to have a conversation. You can use arrows, you can use shapes, but it's this call out button where you and I are going to get the most work done. And I'm going to show you. Here's a picture about annotating your chart. So I'm going to put it in the room for you. If you take a minute each and every time you do something to write your rules on the chart, to show me why you got in, where you got in, and why you got out, how did you feel? Were you confident? Were you anxious? Were you nervous? This conversation that you give to me in the room is going to give me the ability to give you the best of the best information, the best feedback, and hopefully get you right where it is you're looking to be. And there's two ways to do this. Once that image preview is in there, I can click copy, and when I do, it's going to put that that picture right on my clipboard. Let me sneak this over into view real quick. Whoops. Goodness gracious, what did I do? Trying not to double up and triple up here. Tell you what, we're going to hold on just one second. Son of a gun. All right, are you guys with me here? There we go. Can you guys see my screen? I'm so sorry. I had about 6 different things change direction on my computer just now. So we're in. I can post that picture right into the classroom, guys, and you can take a look at it. Can also click this upload button. And then once I click that upload button, I can copy that screencast and I can put it right into the room, and then you can take a look and do what you're doing. All right, I'm going to pop out. This is what I wanted. There we go. All right, guys, so using that, I apologize. My computer's been a little weird this morning. Using that screen capture, have a great conversation in class. Going to be the first thing that you really focus on. If you're brand new to the classroom, if you're working through being able to take these pictures, to show me what it is that you're thinking of, go ahead and post one. Post a picture in class. Just call it test. Let me know that you're capable. And then the next place, guys, is going to be the tutorial section. In the tutorial section, I'm going to open this up. You can really find the tutorial section in 2 places, and I think that's kind of cool. If you're just staying in Discord, everything in that tutorial section you're going to find in the self-training, and this is A to Z. For the brand new user coming through, taking a look, if you're doing that independent study, the self-training is going to get you started. It's going to put you on a path. It's going to help you build a foundation. But of course, we want you in the live classroom asking questions, making sure that you're comfortable with what you're reading. There's the user guides that'll talk about not only the tutorial section, but also the user guide. There's a set of rules for you, the trades that we teach and talk about. There's sections on chart reading, going through, looking at what you're doing, advanced chart reading, example trades. All of that's available on Discord, and it just kind of mirrors and mimics what's available right here in the education room. There really are no secrets with Nexgen, guys. We try to give you everything possible to make sure that you are comfortable and very confident in what you see with the indicators, with what you're reading. Um, and that's exactly what you're going to find in here. Is you're going to find those rules. You're going to find those looks. And the section that I want to draw your attention to first is focusing on the absolute best of the best, focusing on the highest probability trend trade for your first 30 days, guys. Give me 30 days of allowing it to be simple. Give me 30 days of giving yourself permission to be a student. Because what we're going to do in this first 30 days is focus on the high probability trend trade. And this high probability trend trade is a trade when all the indicators line up for a trade. Every indicator on every chart supports you getting into the trade, supports your rules met. And this first 30 days of high probability is going to teach you to read your charts. And that's exactly the focus of this classroom. It's exactly the goal of everything we do with Nexgen. By providing you these indicators, giving you the live education, teaching you to read them, to understand, so that when you open up your workspace and you look at those charts, you're going to understand three essential elements. Where the market is likely to go. And when you can recognize where the market is likely to go, you can use that spot for an entry for a high probability trend trade. You'll be able to understand where the market is likely to continue, where it's likely to stop. And each of these elements come together to trade these three rules, these high probability trend trade rules. Each chart, everything is going to agree, and this is going to get you into this high probability trade. This is a trade that when it's been studied, back tested, forward tested, traded live, this is a trade that has the potential to win 70 to 80% of the time. And this is what we're going to focus on in the very beginning, learning to read our indicators through the high probability trend trade. Just give me a Y in the room if you can hear me. We had a little bit of a power failure here at the house. First day in the new digs, guys, and they're making me work for it, but that's okay. Life's about challenges, right? Overcoming. It's going to be good. Anybody, can you hear me in the room? Just give me a Y. Say, yep, Mark, I've got you loud and clear. All right, guys, cool. There we go. Now I can see you. No picture yet. It looks like we should be screaming, guys. I'm going to reboot the picture, and I apologize for the challenges, and I appreciate the patience, but I do believe I'm back. You guys should be taking a look right there at the glossary page. Everybody okay now? Good deal. Guys, thank you so much. Thanks, Ron. Awesome. So I'm going to jump right back in because you know what? I love a good challenge on a Monday morning. Gets the blood flowing. We're going to focus on those high probabilities, guys. You're going to learn to read your charts, read your indicators, and it's going to take you into the realm of medium probability trades. It's going to put you in a position where you can take trades where most of your indicators line up for a trade. However, a small issue exists. Your ability to read your charts is what's going to help you identify that small issue. And this really will be the vast majority of your trades. When executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your charts will help you manage them assertively. If there's trouble in the way, you're going to be able to identify it. You'll be able to get to a zero loss level, take quick profits. So the goal is to have you focused in and executing medium probability trades because, guys, this is where an awful lot happens. But it's going to be you're focusing on the high probability trade for that first 30 days that's going to give you the skill set that you need to do it. So let's talk about the high probability trend trade. Remember, embracing simplicity. Going to focus on two charts. I've got NinjaTrader 7 set up for you guys today, and I have two charts. I have a 13.2. It's my broad stroke of a brush. It's giving me kind of this overall temperature of what's going on in the market. I'm going to be able to determine a couple different things. First, just the general trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. And we're only looking for rules to be met corresponding with the direction the market is trending. And then your first two rules for a high probability trend trade have to be met on that 13.2. When they are, going to go to the 5-1 chart, and we're going to refine the broad stroke of a brush. You're going to be able to pinpoint with pretty amazing accuracy where the market is likely to continue. And rule number 3 is going to get you into that market. It's going to give you that entry at the best of the best spot, allowing you to reduce your risk and maximize your profit potential. So we're going to use two charts and 3 rules, guys, and I have paraphrased and cliff noted these 3 rules for you. Yeah, Walter, I apologize. So we are in Discord. When Discord fills, when we get to those 50 viewers and people can't see anymore, then we have the YouTube, the Nexgen YouTube channel, where you can come in and look at us live. Right now, we're still under the numbers, and John's put a little note in class. We're going to try and keep Discord for you guys that need to post pictures. We're going to try and keep Discord for you guys that are, they're really participating in class. And then if you need to, you can go over to that YouTube page and just watch. Maybe you don't want to post a picture. You just want to get the lessons in and soak it in. YouTube's great for that. The picture's amazing. It's on about a half a second delay. So works out. So guys, 3 rules on 2 charts. And those rules are going to be, like I said, I kind of paraphrased for you. Rule number 1 says that we have to have strong triggers. And we're going to talk about each and every one of these, what they look like. Rule number 2 says no termination conditions. And then rule number 3 is going to have us using a limit order to buy or sell a pullback at an area inside of favorable large triggers. And again, we're going to look at each of these. We're going to break it down visually. We're going to talk about what it means. But I think that the most important thing is to understand that your rules provide an advantage. Your rules are put into place to get you an advantage each and every time you trade the market, each and every time you take a trade. And those strong triggers are going to provide the advantage of momentum. Those no termination conditions, no areas where the market is likely to continue, will give you the advantage of a clear path. And by using that limit order to buy or sell an area inside of favorable large triggers, well, you're going to have the advantage of an entry where the market is likely to continue. So 3 rules, 2 charts, and let's get to defining those rules. Rule number 1 says that we have to have strong trigger lines. Guys, this is where I put that little disclaimer in the room. If I talk about a rule, if I look at something, if I talk about something, explain something, and you need a little help, I want you to raise your hand, use your voice. Let me know if you have a question about what we're looking at. This room is designed to be more of a discussion than a lecture. So as we look at these trigger lines, in an uptrend, small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And guys, it's that space between the small and the large that lets me know that the odds are favorable for the market to continue up. When we have a downtrend on the 13.2, your small triggers will be below the large triggers. The large triggers should be wide, angled in the direction of the trend. And once again, it's the space created between the small and the large that lets us know that the odds are favorable for the market to continue down. This is that advantage of momentum that gets us into the high probability trade, that gets us looking for rule number 2. And we commit to that advantage of momentum because as those small triggers work their way inside of the large triggers, anything can happen up or down. We lose that advantage of momentum. So rule number one, we're looking for distance between the two in an uptrend from that point where the smalls accelerate away until they return. And then you're going to look every now and then as you go back and you study, you're going to see these tails when you have odds favorable momentum. Guys, this is going to be your study tool, and I'm going to show you this picture and put it in the room for you guys that are learning this look. When you have that odds favorable momentum, these circles on the tails are potential entries on the 5-1. You'll see it in an uptrend. You'll also recognize them in a downtrend if you're scrolling back. Novaks are getting popular. Thanks, Paul. Good morning. You'll see these potential entries, and we'll talk about rules met to get into those entries, but this becomes a great study tool, identifying the momentum, understanding that there are potential entries when that momentum is there. So do me a favor, give me a Y in the room. If you're with me, if you understand, and if you have a question, let me know. Let's talk about it. But rule number one, strong trigger lines will give you the advantage of a market that's likely to continue in the direction of the trend. Rule number two says don't trade into a termination condition. These termination conditions are the areas where the market is likely to stop. They may reverse the market. And it's really a simple comparison of an area and those same trigger lines that give us momentum. And the areas can be support or resistance. Yellow 1-to-1 dots, it could be that cyan divergence low line, a magenta divergence high line, or a large chart midband if the triggers are a full bar away. There's also a termination condition that says 3 divergence in the same area, and we're going to talk about this one last. We're going to talk about this one because we're going to recognize this one termination condition on the 5-1 chart first. And it's not only going to be used to recognize when that market may reverse, it's also going to become a very valuable tool to manage those medium probability trades. So we're going to get into it. We're going to say, how do I determine a termination condition? And it's a simple two-part process. I'm going to pull up a picture of the picture here. Two things have to happen in order to determine a termination condition. The first thing is price reaches an area, meaning that these price bars come down, come in contact with, or a tick away because they are areas. And when price reaches this area, the only question you have to ask yourself to identify this as a termination condition is where are the trigger lines? After price reaches any Fibonacci support, if those trigger lines are not below the support, no more trend trades. It's simply an area that may reverse the market, that's likely to stop the market. You have forfeited the advantage of a clear path if you take this trade. The rules say wait for an area to break, meaning that this area of support, when both sets of trigger lines, notice that I don't say price. When both trigger lines break below this area of support, support begins to act as resistance. We consider this area broken and we can begin looking for that high probability trend trade once again. So price reaches support or resistance or 1-to-1s, absolutely no trigger lines go through, no more trades in the direction of the trend until the area breaks, and the area is considered broken when both small and large break through the area. There's one other look, and this one works on potential. When price reaches an area with odds favorable momentum, and this is a very key part, let the market have odds favorable, likely to continue in the direction of the trend. When the smalls break through with that momentum, when the large do not, we call this a 50-50, guys. And all that 50-50 means, it's not the potential of a win. It means that you have an area with the potential to break, but it hasn't broken yet because both sets of triggers have to be beyond the area. When you have this 50-50 look, you can still take a medium probability trade. This will be the first medium probability trade that you probably work on. But when you take it, the idea is that entries must be ideal. And we're going to talk about that ideal entry. But there's 3 ways to look at areas. Area not broken, no more trade. Area broken, trade away if the rules are met. Area with the potential to break, take a second, make sure that your entry chart's giving you everything you need to be successful on this trade. So I'm going to go ahead and put this one in the room as well, because termination conditions are the one thing that new users love to trade directly into, myself included. I was the king of trading into areas likely to stop the market. So I like it when you guys spend just a little extra time working on this. Price reaches resistance. None of the trigger lines break through, guys. This is an area that may reverse the market. No more long trades. Price pulls all the way back to support, all the way back to this mid band. No trigger lines have gotten to the other side. Support is likely to stop the market. Guys, this is where I remind you, 90% of what you're going to be doing is going to be reading your charts, focusing on what the indicators are telling you to provide an advantage so that you can take a trade. No longs, no shorts. Little thing I like to point out here is price pulls all the way down to this Fibonacci area. Price pulls all the way down to this mid-band. Your large triggers don't follow. This becomes a very key look when you are identifying a mid-band acting as a termination condition. When price accelerates away from these triggers, the large triggers remain a full bar away. Well, then we get this gap theory. Price is more likely to return to those trigger lines when it accelerates. I'm going to put that picture in the room for you. That's a good one for your spreadsheet. And what happens is it extends, the trigger lines don't follow, and price snaps right back. And at that point, you can see that it retests resistance, a magenta high line, and another resistance, and none of your trigger lines are broken through. Now we have what's called a pivot stop out. Price has exceeded the pivot given to us here, but the trigger lines couldn't break. This becomes very, very powerful and has the potential to reverse that market. When this termination condition creates this full reversal, large go from green to red, and then it gives you odds favorable momentum, this is your absolute best of the best shot at a high probability trend trade. And if you're looking at that first 30 days, focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart gives you your best chance of success. So give me a Y in the room if you're with me, guys. I know it's Monday, we're waking up, still getting coffee in the system. Price reaches an area of support or resistance. If the trigger lines can't break that area, guys, no more trades into that area. Really pretty simple. We already have odds favorable momentum. We have a market that is moving in the direction of the trend, and the momentum says it's likely to continue. That's rule number 1. But rule number 2 says if an area is reached and the triggers don't break, we're not looking for a short trade into that area, guys. And you'll see that this termination condition creates a full reversal. This full reversal gives me odds favorable momentum, and there's one of those circles on the tails. Guys, that's your highest probability trend trade. This is what we're going to be focusing on for the first 30 days. No more shorts. Let it roll. Be a little bit patient. There's your opportunity. Still a good look. Strong triggers above everything. That's one of those 50-50 looks. It has the potential to break. A circle on this tail may still be a rules met trend trade, but this one from the termination condition is your best chance for success. And then our final termination condition. Sometimes the market is it just seemingly turn from nowhere. Everything breaks your area of support. All the trigger lines are below, and you're going to say to yourself, well, this area is broken. Or maybe at the top, everything says this market's likely to continue up. This final termination condition you'll be able to recognize on your 5-1 chart first. It's applicable on any chart, any time frame. but that smallest, fastest chart is where you're going to recognize this first. And it simply says that 3 divergence in the same price range may terminate a trend. Divergence is a loss of momentum. Price forms a pivot, momentum doesn't follow. This is written in the background in your software, guys. Uses MACD, BB indicator, and a little mathematical stuff. But basically, for those of us that don't do math, when I see this negative number, I get a cyan divergence line. It lets me know that there was a loss of momentum in the move. When I get 3, it may terminate the trend. It becomes more powerful. Notice how my trigger lines go from odds favorable to anything can happen. This becomes an even more powerful indication. And then when that third pivot is higher than a low or lower than the high, you get that head and shoulders pattern, and it just adds fuel to the fire. So we're going to use these divergence on a smaller, faster chart first to recognize change that's taking place on the 13.2. Remember, broad stroke of a brush, we're using 1 bar. This is going to change slower than the 5.1. So maybe from this bottom or this top, if I have this look, this becomes my indication not to take that final trend trade. The other side of this is if I enter, let's say right here at this midband, right here at these 1-to-1s, I'm looking for a short move. I'm looking to get to the next key Fibonacci area. If these divergence print, it gives me an opportunity to recognize that change and to manage out of my trade. Maybe take profits a little quicker, get to a 0 loss level, but I can use the change on the small chart to help me identify the potential change on the large chart. So termination conditions are going to give you the advantage of a clear path. So now we have a market that's likely to continue in the direction of the trend. We have a clear path to our target. So now we're going to identify our entries, guys. I love the entries because they're not difficult, but it takes a little bit of practice to recognize, to catch them real time. So I'm going to teach you not only the rules, but we're going to talk about how to study to get very familiar with the look. During the live market, this is going to be the look of your 5.1 when the 13.2 triggers are strong. This is the moment that you're going to start looking for your entry. And you're going to focus your attention on the 5.1 large triggers. If they are up and at blue Fibonacci line, green midband, 1-to-1s, this will be your area to watch, guys. All we've done now is made the decision that it's time to take a trade. Rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So with everything going up, we're going to wait for the market to pull back, and that pullback starts with a reversal bar. All of these bars were going up, they're all green, we're going to wait for a red bar. If we were in a downtrend, all these bars would be red in the direction of the trend, and we would wait for a green up bar. This reversal bar is the beginning of the pullback, and it's time to focus on your entry areas. You're going to create what I like to call a window of opportunity, that area where the market is likely to continue. And in an uptrend, it's going to extend from your highest point of support to your lowest point of support inside of these favorable large triggers, these large triggers that are strong, excuse me, that are wide, that are angled in the direction of the trend. So my window of opportunity extends from 79.20 down here to 79.09. I've got a window where the market is likely to continue, and I'm going to activate my limit order right at the top because I have odds favorable momentum on the 13.2. The market is screaming in the direction of the trend. Because I have no termination conditions on the 13.2, there's nothing to slow me down. So I'm going to enter at the top. My limit order is set, 79.21, and I'm simply going to be patient. Either the market's going to come and fill me, and if it pulls back to 79.21, I'm in a long trade. I am long with the advantage of momentum, nothing in the way, and I'm also long having entered at the area where the market is most likely to continue in the direction of the trend. 3 very distinct advantages. putting together an entry of a trade that typically 70 to 80% of the time results in profit target reached. When I enter this trade at 79.21, my initial stop goes below that window of opportunity, into that area where the market shouldn't go, below the 1-to-1s, below the large triggers, typically 12 to 14 ticks. Guys, it's important to understand that the methodology provides you a statistical advantage. It provides you a set of rules which have been proven to win more than they lose. And part of understanding and taking this trade is the trust that if the market does go beyond that window of opportunity, you want to be out of the trade. But 70 to 80% of the time it doesn't. When it begins to move in the direction of the trade, risk can be reduced below that pivot. And because you waited for the areas inside of favorable large triggers, you've increased your potential for profit. So guys, 3 rules, right? 2 charts. And once again, when you're putting them together, when you're studying them, you're going to scroll back and you're going to look for these rules met on the 13.2, and you're going to look for these tails. And you can see we have strong trigger lines and there's no termination conditions. So rules 1 and 2 are met on the 13.2. Just on the 13.2 chart, if I circle that tail, remember, I'm not sure where that tail is going to happen, but I'm going to circle it. And if it lines up with an area of support inside of favorable large triggers, then I know that I have a rules met high probability trend trade. So give me a Y in the room if you're with me on this one. Identifying momentum and clear path on the 13.2, identifying where the market is likely to continue on the 5.1. And we talked about that best of the best look for an entry. Guys, this is it. 100%. Notice that my small triggers are well outside of my large. I have odds favorable momentum. Recognize that there is absolutely no slowdown, no divergence on the 5.1. And I have a tight window of opportunity inside of those large triggers. A lot of you guys are going to say, but Mark, there were 1-to-1s. Isn't that a termination condition? Guys, termination conditions happen on the 13.2 with the exception of 3 divergence. So I'm not too terribly worried about this 1-to-1. It's giving me a nice little bounce back right to this best of the best area. Another question people have, they say, but Mark, my small triggers have turned against me on the smaller, faster chart. Remember that we're gauging momentum on the 13.2, and in order for this pullback to get to the area inside of favorable large triggers, very often these triggers may roll just a little bit, but if they're starting in that strong position, they're probably going to stay above those triggers more often than not. So guys, this is your best of the best. This is your high probability trend trade. This is the one that you're going to begin to develop a little bit of faith, a little bit of trust, a lot of practice, some repetition. And the easiest way to do that is to use this spreadsheet, guys. For those of you that are brand new to the class, the first 45 minutes or so are dedicated to getting you on the right path. The rest of the class is dedicated to reading your charts, giving you feedback, answering all of your questions. This spreadsheet, guys, is your path to success. The first page on your spreadsheet, every time you take a trade, put it in the spreadsheet, annotate the chart, talk about what you see, talk about what you felt, talk about whether or not your rules were met. As you take those pictures over and over, you're going to begin to take pictures of that perfect trade entry. And then you're going to learn to manage it. You're going to begin to recognize patterns. You're going to identify termination conditions. And ultimately, you're probably going to add a market flow chart. You'll add a third chart to those 2 charts as you learn to read your indicators. Every time you take a rules met trade, fill up this second page. On the third page, I've given you almost 70 pictures of high probability trend trades that you can come into and study. Make sure that what you're seeing lines up with what's rules based. There's the second trade we teach, the high volume area. There is a whole section on management, chart reading things, termination conditions. All of this is available for you in the spreadsheet, guys. And this is how you're going to build trust in the recognition as you learn the software. And let's see real quick, guys. This is the S&P. Looks like the market's open. Here I have small triggers above the large. Nothing in the way. What does that circle look like over here? It looks like a pullback right to support inside of favorable large triggers, doesn't it? It's a little shorter pullback. Here's that mid band right inside of the large triggers screaming up. If the first one missed you, the second one probably got you. And as we scroll back, you're going to see this more and more. Smalls above the large are wide. They're angled in the direction of the trend. Once again, guys, here's a pullback right to the mid band, but it's just above those large triggers. May not be an entry for the average user. But do you see how they correspond? Strong triggers, we're clearing the areas. There's that tail. And when I circle that tail, I can begin the process of recognizing whether or not it was a rules-based trade. Sometimes the market pivots from nowhere. Josh, it would have missed me. It's not the divergences that I'm worried about here. My rules say, and guys, this is a big part of what I do as a trader, and it should be what you do as a trader, is you're having a very distinct set of rules, right? So Josh, we have odds favorable, larger coming up, everything's strong. It's one of those 50-50 trades. It has the potential to break with this much momentum, but it hasn't broken yet. My rule number 3 says that my entry needs to come inside of those favorable large triggers because price typically snaps back. It becomes a medium probability trade. And Josh, this one would have missed me by a couple ticks, and it ultimately would have gone without me. And I'm okay with that because every time I take a trade, every time I follow a set of rules, those rules are designed to give me an advantage. And here I don't have the advantage of an area where the market is likely to continue. Does that make sense? And then as you start growing into these medium probability trades, and I think this may be a good example, using those smaller charts, all of your triggers have broken the area, the smalls are still working above them, right? We have a clear path where we have some momentum, and you do have an area of support, but it's below those large triggers. If you take the first pullback and enter the market here at 48.50, you can begin to recognize the slowdowns, recognize the trigger line position changing, and you'll notice that it pushes deeper. And ultimately it continues. But this may not be your trade. This may not be your rules-based trade. Not yet. But as you learn to read your indicators, dollars to donuts, that's going to be a good one for you to get you where you want to be. But it's important to know what's it going to take to get you in. So guys, this is going to be the last thing that I share real quick, and then we're going to get to chart reading. Luciano, straight off of the education page. Not for the discount, I don't. Are they offering a discount this week? They've been doing a lot of them lately. Go to the Apex Trader. Let me open that up. And I think what may be the best thing to do is just sign up and get on their emailer. And man, they send these things out all the time. I think Save 50 is the newest code. Last time I got an email, if I'm not mistaken. It's always 50%. Awesome. I got mine at 80. I'm controlling a $100,000 account for about $44 a month. All right, guys, we're going to define our entries. And we're going to show you new guys. How do I write a plan? How do you put yourself in a position to be consistent? How do you put yourself in a position to be successful? How do you get yourself in a position where you're doing the same thing that provides a statistical advantage every time? So as I talk to you new guys, I'm coming through and I'm looking. Buck Blue, you're obviously doing an amazing job lately. I'm looking at your charts there and they're amazing. As you're coming through, Joam 1957, I know that you're new in here. Same thing. Thank you for that, Gary. I know that there's a lot of you in here. Ronald Smith, I believe. I'm going through my list. 000. A lot of you guys brand new in the room. This is one of the most ignored parts of the plan, guys, and this is probably the most important. Define your entries. Define exactly what it's going to take to get you into a trade. I've given you this checklist. I'm going to give it to you right now in the room. This is a high probability trend trade checklist, guys, and this is nothing more than a set of rules that give you the advantage. And here's an example of how to write that plan. My trade is the high probability trend trade. For 30 days, my trade is the high probability trend trade because it gives me the advantages that I'm looking for. In order to enter this trade, I must have the conditions of this checklist met. The same checklist that I just put into the room that you can download is pretty simple. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? If it is, that is bonus, but it's not mandatory. It's not mandatory to have a great trade, but this is the one that gets you to that 70 to 80%. Do you have odds favorable momentum? No termination conditions. Area for entry inside of favorable large triggers. If you're marking yes to all of these guys, that's your absolute best of the best. This is your entry that's going to teach you to have trust in the methodology. It's going to teach you to read your indicators. And then you'll just want to start taking pictures. We talked about it in just a few minutes ago, filling up your personal trade setup. So that absolute best of the best high probability trend trade. Begin to recognize the look, the advantages, and everything that it does for you. And then as you work into medium probability trades, that second trade you begin to add to your plan. Well, if I have one of those 50-50 trades, these are the rules that must be met for me to pull the trigger. No divergence on a 5-1, small triggers outside of the large. Guys, this is just an example. This isn't a gospel truth. You will write your own. Take a couple pictures. What does that perfect entry on a medium probability trend trade look like for me? Well, it means that I have all that momentum. It means that I have an area with the potential to break. And if there's no divergence, and if I have strong triggers, I can take that entry right at the area inside of favorable large triggers. If I have divergence, I'm no longer looking for that entry because I've lost the advantage of momentum on an area with the potential to break. And here you can see what happens after that divergence prints. So I've identified my entries. I've looked at my situational exceptions. And then guys, in the very beginning, as you learn to read your indicators, allow your management plan to be very methodical, very mechanical. This is the most mechanical approach I know. Trade 2 contracts, initial stop will be 12 ticks. I'll move it above or below the window of opportunity. And when it moves in the direction of my trade, I'll move it below the reversal bar, above the reversal bar. There's zero room for opinion there. There's zero room for emotion. It's a very mechanical approach to it. I'll take profits on my first contract at $100. Quick profits give me that dopamine kick, get me excited, keep me motivated, and I'll go to break even because now not only do I have $100 in the bank, I've got nothing to lose. And then my second target will be $200. So you're looking for only $300, not looking to hit home runs in the very beginning as you learn to manage. The reality is a lot of your trades are going to be $100 and break even, which is okay because you're going to continue to fill this spreadsheet. And the more you fill this spreadsheet, let me pull mine up, you're going to begin to recognize when you could hold for longer moves, when you needed to get out sooner. It's easier for you to recognize these things if you share in class, if you post your pictures in class and use that spreadsheet. Between the two of us, we're going to recognize the patterns making you successful. We're going to recognize the patterns giving you trouble. We're going to identify whether or not you're getting that best of the best entry, how we can help you make more money, how you can avoid losing so much money if the trade's not right. And if you follow this path has been in place for nearly 20 years in some shape or form. Learn your rules, practice your trades. Don't take the wrong trades because you're on simulator. Post in class, post the pictures of your correct trades, post the pictures of the mistakes you make because that's where the information really comes from. And then make sure that you're doing this every day. Repeat this process every day. And the people that follow this path, the people that are posting in the room the most, the people that are using a spreadsheet, that are studying their spreadsheet, guys, these are the people that are getting where they want to be the absolute fastest. I've seen it for years. And we're just going to go through. Now that we've got all this put together, we're going to watch the live market, guys. That's your S&P. Here's crude oil. What do we see right now at crude oil? Price reaches resistance, pulls all the way back to support. Oh my gosh, look at this picture. I want you to look at this picture right here, and then I'm going to go back to the termination conditions. It's not an exact picture, is it? But look at this one, and look at what's happening currently in crude oil. Resistance to support, pivots stop out at multiple areas, trigger lines look different. Everything that we do revolves around patterns, guys. This picture was taken in 2021. There's that pivot stop out, and look at what the market's doing. Rocketing down almost instantly. Nexgen users, you have the advantage of recognizing where the market is likely to go, using your trigger lines to determine whether or not you have a clear path. You'll be able to identify momentum as it's building, as it presents itself. And then once you have that odds favorable momentum and nothing in the way, it's just a matter of identifying where the market is likely to continue. And guys, I have a termination condition here, but if these small triggers break through, I'm going to chase this mid band down because that becomes my highest probability entry for continuation of the market. Give me a Y in the room if you're with me, guys. This is what we're going to focus on for 30 days, the absolute best of the best, giving yourself all of these advantages so that you can learn to read your indicators, so you can give yourself that high probability trend trade, work your way into medium probability trend trades, work your way into edge trades, into high volume area trades, into momentum style trades. Not a broken area yet, is it? Smalls haven't cleared. Larger above. It's trying though. Coming from a great termination condition, pushing down. Guys, 90% of what you do will be reading your indicators, sitting on your hands, being patient, waiting for the perfect setup, because the goal of being a day trader isn't to be busy, it's to be profitable. All right, 9:55 in the morning, guys. I'm going to take just a second. My water hit bottom here. I'm going to leave you with crude oil. If you take a trade, take a picture, post it in class. If you have a question, if you see something maybe you don't understand, post it in class. Post your questions in class. I'm going to refill my water. I'll be back in just a second. And then we're going to start looking at all these charts that you guys have posted, guys. Second hour, we're going to see what you've done. We're going to talk about how it relates to the rules. If you're trading a different plan than these high probability trend trades, remember, do me a favor. Tell me why you do what you do. It'll make it easier for me. Circle your entries, highlight your exits, annotate those charts, and let me know why you're doing what you're doing, guys. I'll be right back in just a minute. All right, guys, just a short little break there. We're back. It's a two-part process to recognizing a termination condition. The first part is that the trigger lines break through, or price reaches the area, right? Price trades down, reaches the area, and you have to ask yourself, how many trigger lines have broken through this area of support? In the moment, absolutely none. Give me a Y in the room if you see it. The small triggers are straddling it, but they haven't broken through, right? We're trading into an area with the potential to stop the market. Rule number 1 was met. Rule number 2 was not met, which means that if you were enamored with an area of resistance inside of favorable large triggers, things went a little sideways for you. We were losing momentum. There's a second higher momentum. Allowing an area to break. Guys, what you are seeing here on your 13-2 chart, and I want you to see this, 3 divergence from the bottom. I'm going to take a picture. And this is a little understanding of our place in the matrix here. Termination condition pushes the market all the way up to resistance. Guys, the buyers took control. Everything says go, right? There was a little hiccup here. Pushes up right into the mid band. Large triggers don't follow. Boom. All the way up to resistance. Buyers in control. Right at this key area, the sellers push back. Once again, acceleration away from those triggers. The trigger lines don't follow. The buyers push back, snap through, push up. Sellers fight straight to Fibonacci support, right to resistance, support, resistance, support. What you're witnessing is a fight between buyers and sellers, guys. You're witnessing deep pockets investors jockeying for position. My favorite picture. You ready? Understanding where we fit into this whole thing. The sharks are the big money investors, guys. If you've ever watched National Geographic, you know that a remora swims by the sharks, lets them do all the hard work, and then just feeds off of what they provide. If you're trading in determination conditions, you're the guy who tried to be first. If you're fighting those trigger lines, if you're trying to buck the trend, you're fighting those sharks that are duking it out. Guys, we can see where they're fighting. Let it clear, right? Straight from support, right to resistance. We've identified the range that needs to clear before we have an advantage once again. Juicy morsels between the teeth. A lot of traders come to me, they go, well, Mark, how do I stay out of choppy markets? How do I keep from getting beat up in choppy markets? Your high price, not a clear path, any direction, which means that your rules weren't met, which means that you didn't hope. You simply waited for them to come to fruition. So I'm going to scroll up and I'm going to show you guys real quick. This is my chat box. I have to scroll all the way up to the top of it to get things moving, guys. So I'm going to start looking at charts. We're going to take a look at them. We're going to see what's happening. And then we're going to come back and I'm going to answer questions. But if I miss a question because I'm scrolling back and forth, I'm going to apologize right off the bat. And what I'm going to try to do is make sure that I get down, scroll, and see those questions. But we have our first post of the day, and this came from Buck Blue. And I absolutely love this. This is a termination condition. Everything's going down. Small triggers are broken below the large triggers, not trading into anything. And Buck Blue, you took the pullback directly to resistance right there at those favorable large triggers. It overran a little bit, but your initial stop keeps you safe and the market continues right down. And if you look at the momentum, you probably could have carried it just a little bit more. Notice that he's using that checklist, that same checklist that I put in there. Is the market coming from a good top or bottom? Absolutely it is. Odds favorable on the 13-2 for sure. No termination condition, none present. And he takes that area for entry right at the pullback inside. Nice job, Buck Blue. Great looking trade. Ron, Ron trades a little different plan. He's a get in and out kind of guy. Ron, is that a trend trade? Holy smokes. Well, that one was odds favorable, no termination condition, pull back to a mid-band. Textbook trend trade, making a little money on the way down. And then with odds favorable momentum, right? Everything clears. Ron gets in, takes some money, gets in, takes some money, gets in, takes some money. Paul, you don't need Ron's rules. Oh, John C., I just saw yours. It is amazing. Without a doubt. And I'm excited to have you here in this room. Learn more about it. And John C., do me a favor. If you have questions, don't hesitate. Yeah, he's good at following them. He's established them. Guys, one thing that you'll notice, the people that are successful, their trades look the same all the time. Their trades look the same, whether it's a high probability trend trade or a momentum-based trade, whether it's an HVA trade. The rules look the same. The trades look the same. There's a level of consistency that just absolutely is a game changer. Buck Blue, let's see what you did. And here we go, guys. There's that consistency. Odds favorable momentum. Smalls above the large are wide. They're angled in the direction of the trend. There's a pullback. It's a little bit below that area. The market begins to go up, taking quick profits. You got scared out of the trade and exited early. That happens sometimes. This one pushed a little bit beyond. You got in. All your large triggers still stay up. Your small triggers are beginning to roll. And you're coming from a reversal bar right there at that HVA in a market that's screaming to the upside pretty good. This is appropriate as you come into this HVA line, Buck Blue. You got such a great fill. Go zero loss. Give it a chance to run on that second contract. If you start trading 2 contracts eventually, you'll be able to do that. Very quick profits on the first. Get to that trouble spot. Go break even and nothing to lose. Great trading. Here we have a loss of momentum, a couple losses of momentum, and it pushes up to that higher area. I love this entry. It's a little bit beyond a high probability trend trade. So I see that you're using the checklist, but we've gone outside of it, right? Because we don't have odds favorable. We're at the tail end of it, but we do have an area likely to stop the market with all the trigger lines below, and it lines up on every chart. This is more of an edge trade, getting in, executed perfectly, absolutely ideal target right there at the trouble spot. Buck Blue, you are doing an amazing job this morning. Gary posting up. Smalls are starting to break below here. Not quite the best momentum. You recognize that. You get in at a good spot. It just decides to go. And then Gary looking maybe for that entry over here. It's a good read, good direction. It just decided to run up a little bit more on you. And they'll do that sometimes. Guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30%. And then Gary, as you're coming through here, you do have that odds favorable. 3 divergences means that it could push up higher. You jump in, great entry. Stop placement, quick profits. Notice and change after those 3 divergences. Lost faith in the trade. I think multiple divergences will do that sometimes. It's good recognition of a termination condition, Gary. John, you say you have a one-on-one with Jim today at 1 p.m. Eastern. Awesome. Sorry, guys, I'm scrolling back and forth. And John, if there's anything I can do to help, please don't hesitate. Gary, once again, there's the aftermath of that trade. Odds favorable, momentum wins, right? letting the 13-2 lead the way. I'm having that put on a coffee cup eventually for you guys. Letting the 13-2 lead the way. Letting the 13-2 let you know that the market's likely to continue. Letting the 13-2 identify that momentum, those areas. And that looks like it was right at the open, and they just sold it off real quick. Gary, it's a great trade, and you had reasons to exit with the multiple divergences. Once again, when you have this much momentum and you're trading multiple contracts, it gives you an opportunity when everything says down, and then maybe looking for a second chance if you need to. Nice trading, Gary. Keep him busy this morning, right? And then John C., there's your test. I just got it. I think that was right when my internet blinked. Great looking test, good looking picture. Keep those coming all day long. Back to your trade. In after trouble with odds favorable momentum. Out before trouble. Hey, Paul, there's his rules right there. Odds favorable, clear the area. Take quick profits. Go back to watching Looney Tunes. John Novak, odds favorable. Good. Didn't get the first entry, chose not to take it, waited for the triggers to roll. All three triggers up, in at the mid-band to finish the move. Based off of this picture right here, guys, this is going to be in your chart reading. If you take the perfect trend trade, if you take that rules met, high probability trend trade, right, and it just doesn't work out, it pushes a little lower, when all three triggers roll and go in the direction of the trade, it's an opportunity for a re-entry. So look at this picture from probably a couple weeks ago. Whoops, and I just deleted his. Just deleted the one that I wanted to look at. Let me get back to that. When we talk about patterns repeating themselves, right? Over and over. Patterns doing the same thing over and over. And here's that picture. Almost exact, right? Good looking trend trade, doesn't work out, pushes a little lower. All three triggers back in at the mid-band. Perfect looking trend trade, pushes a little lower. All three triggers up, back in at the mid-band. Remember, guys, we're trading patterns over and over. And then that's exactly how this one went, right? Identified the entry. It's almost the same price as the one that didn't work. Quick profits at the trouble spot. Zero loss. If divergence prints, he'll be out. If not, he's taking money. Great trade, John Novak. Dab chain. Putting on a clinic, right? 3 divergences in the same general location lets you know things are likely to push down. You take that stab back to resistance, get paid. Right at support at 85, you're down here at 41. Right here. Market pulls back and you say, hold it, we're not done. All my triggers are down. You jump back in, make that money. Dab chain, solid work. And guys, I want you to remember that these pictures aren't just for the users. These pictures are also for you guys that are learning. Look at the pictures that are posted. If you have a question about what I'm talking about, let me know. And Dab Chain, you're on Apex, not Sim. Nice work, man. Keep doing what you're doing. And Joel, it's not that I don't trade with divergence. And I'm glad that you asked that, because this is one of those ways that the message can be skewed, right? When I talk about divergence, Joel, let me go to this very simple, remedial, conservative, I'm a brand new trader. When I talked about that, I'm talking about that 50-50 trade. As I'm learning to take these medium probability trades, I'm really referencing areas with the potential to break but haven't broken. So if I'm a brand new user and I'm learning to read my indicators, remember that taking one of these medium probability trades means that you have to manage assertively, right? So the best of the best look is no divergence. It's strong triggers. It's that small window of opportunity. So Joel, I'm referencing this on an area with the potential to break. Let it be perfect, right? Let it be that best looking trade that you've ever seen in your life. But look at this. Here's a divergence, and look how far outside of the large the small are. There's still a potential entry at 1950. It goes a little over 3 points, and then I get a higher divergence. Then I get trigger lines starting to close the gap, but they're still below, and it pushes down a little bit more. And then when I get that pivot stop out, the triggers go inside. That's when it starts moving up. So Joel, for the new user, that no divergence makes it easy, right? Either there's a negative number or there's not. If there is, I'm going to sit on the sidelines, but I'm going to take pictures. If you get to the point to where you can read your indicators rapidly because you've put the time and effort in, Joel, you'll recognize that there's still a ton of advantages, and this is the point where your advantage goes away and gives you an opportunity to get out of that trade. Does that make sense? Is it, Paul? And skiing uphill when you're bored is a great way to practice for a downhill race, isn't it? Let me go to analogies. So Joel, the better you get at reading your indicators, the more opportunities present themselves, I think is the biggest thing. So if I'm a brand new user, I'm focusing on winning because winning gives me that memory of success. If I really want to be successful as a trader, if I want to build that muscle memory, if I want to put myself where I want to be, I can't practice the wrong trades, right? I think questionable becomes a phrase that maybe isn't completely accurate. It's not that the trade is questionable, right? It's either rules met or it's rules not. There should be zero question, which means that you have to establish rules to take a 50-50 trade. Before you have the repetitions, this is the safest way to do it. When the repetitions are there, this isn't a questionable trade. This is a medium probability trade that's losing its advantage that needs to be managed assertively. You either have the ability to do so or you don't, and it's no problem whether you do or don't. But it all goes back to what, guys? It all goes back to being able to read your charts. It all goes back to understanding these three essential elements. And the better you become at this foundational approach, the quicker you're going to start taking trades because you can manage them more assertively. Great question, Joel. Thank you for that. Let me see where I'm at. And guys, I want to remind you, if I ever miss one of your posts, let me know, please. It's never my intention. Gary, there's those three divergences. I'm trying to line up your timestamps here. Here at 15, we're trading directly into resistance with absolutely no trigger lines through. Termination condition. And it pulls all the way back to that lowest support, doesn't work out. And then you re-enter when your small triggers roll and take it up. Just letting the areas clear makes a big difference. Clear path is huge, guys. Clear path makes the world an easier place to exist. Then Gary, smalls are above the large, absolutely no termination conditions. I like the look on the 13 too. If I took the first one, these multiple divergences and the trend change says that it may push lower. Good read. One opportunity right here. It's a trade that if you got in at 50 and a quarter, you needed to manage out multiple divergences. Nice job, Gary. All right, Paul, 50-50 on that key area, right? 50-50 with divergence at a pivot stop out. Got scared, broke your management rules. Maybe not the worst time to have broken them, but shouldn't have been in this trade to begin with. And there you go. Odds favorable, this key area, this magenta high, has the potential to break. 2 divergences lets you know that things aren't looking the best. Paul takes a great entry and a quick management. That third divergence prints and he's out. No harm done. Paul, it's a good shot at a 50-50 with that much momentum coming from a termination condition. And you managed it beautifully. You didn't hope and hold on. You managed. Dab chain, exact same trade, 50-50. Nice entry. Quick profits. That third divergence says time to get out. Nice job, dab chain. Same management. My triggers had an extra hiccup here. I'm not sure why. Guys, I'm going to scroll down real quick. They look different. It's still strong. Still outside, right? Guys, it looks like the buyers won that fight. Didn't really give us much of an opportunity to get in. I want to take a pause and just look at. Did we catch anything right here, guys? Not quite the best of the best look, is it? And then if you took the entry here, that's a management opportunity. I think both of you guys took that one. Dab chain and Paul. Good job. I like to look at the live market. Want to get back and forth a little bit. Oh, your charts froze. That's no good. Smalls above, area cleared, no divergence, and then it creates that opportunity for management. That's where I take a deep breath. You know what, Gary? This happened to me a couple times the other week. Wanting to take that perfect trade on my live account, taking it, making a lot of money, and then realizing I was on sim. That's going to happen every now and then too, guys. Miss Sophia, let's see what you got. All right. And remember, I love to see those entries. I love to see where you got in. I have no idea how you should have managed it because I can't see what's happening over here. So Sophia, if you want to retake that picture and show me what's happening on your charts over here, I'll do my best to give you a little management help. But right now, I can't see anything. Thank you. And guys, just that reminder. And it takes a little practice. Show me both. Show me not only on the 13.2, but show me that smaller, faster chart. Because there may be some great information that we can all use. But it looks like you were trading with the trend. It looks like you were trading with momentum. Josh S., let's see what you got. Everything says up, no divergence, strong triggers. You take the entry, make your first target, and then you just put some chum in the water, Josh. You said, you know what? I've already made money. Let me put this stop in a fear-based spot. Welcome to the club. Everybody has done that more than once. Remember, guys, have a reason to move your stops. Stops go where the market shouldn't, right? And then dab, looks like the same trade, jumping in, quick profits at the trouble spot. Everybody wants to hit a home run, right? Guys, $100 a pop, 10 times a day, is $1,000. Do it on a 10 lot, right? Do it on 100,000, do it on 100 lot. Everybody wants to hit the home run, right? Everybody wants, well, I want to hold for the duration. Sometimes it's very appropriate to hold for the duration, and sometimes your smaller, faster charts are telling you, man, just take the money. Take the money, skedaddle, add to that P&L. And when it's appropriate to hold for the big moves, hold for the big moves, right? Paul, let's see what you got. Paul took it. Smalls outside, everything up, no divergence, rock star entry, quick profits, divergence prints with the small coming through. I think that was a perfect shot. Perfect entry, guys, no divergence. Joel, it goes back to what you were saying, right? That's a good look. Take that one all day long. And then we start to see the divergences. We see that change. Gives you an opportunity to manage out. Paul, I think you did that one really well. Everything says up, right? Picture perfect. Look at that entry, guys. Like a sniper. Paul had already reached his first profit target before that reversal bar printed. He's at a zero loss level. Paul, I'm not going to lie. I feel like you're finding your mojo today. Gary, charts froze again. Divergence means enter lower. Enter lower. I like it. That resistance at the very top, that's not an area for entry. That's perfect. Little slowdown. Nice job, Paul. Reading your indicators, right? Reading your indicators for the best of the best. And then you get that third divergence. You're able to manage out. Divergence, three divergence, divergence. Everything rolls. You take a momentum style trade all the way down to the mid band. Paul. Nice job. Not a high probability trend trade. With the synthetics still up, with these so far away, it's good for no divergence, little bounce with divergence on every chart. Looking for that first target. It's pretty awesome when you get to the point to where you start reading your indicators, to the point to where you start expanding on what you're doing. John Horde said, if Paul can do it, I can do it. You're in at the mid band, although the fib's not far away. I feel like 3 points is a pretty good run. Managed down, got out at 68. Supported the strong downtrend on the 13 too. And I think this one might be a little late. The second entry may have been just a shade late. And targets were pretty quick there. Nice job, John. And then Gary, that's John's picture for when that trend trade doesn't work, letting everything agree with the trade to get you in for the next shot. 3 triggers. Here's what's happening with all you guys. If you caught the mid band, took it down, went through. Got smalls returning to the large. I've got one divergence with the small inside. And now all my areas are above those large triggers. Remember, 2 ways to look at things, guys. Either your rules are met or they're not, right? This was a quick stab, but whoops, look at the momentum. Breaking through. If you took that divergence with all that momentum, the 1-to-1s were probably your entry spot. Gave you an opportunity. As we get to the top here on crude oil, guys, loss of momentum on the 13.2. We see it with divergence. Multiple divergences on the 5.1. There's another divergence pushing lower. I want to do just a little bit of chart reading here. It's lesson time. And guys, how's everybody doing right now? Anybody have a question? Anything I can clarify, put together for you? That was the wrong picture here. Gary, did you post it on John's picture? Sorry, I may have missed it. I'll get it for you right now. Let me take this picture real quick. And I want to look at, Gary, let's see if I can find yours. Do you have a question on here, Gary, somewhere? Nope. All right, guys. Gary, I'm going to come back to you. I can't find the question. Is this it right here? All right, guys, let's look at something real quick. As the market's coming up, a lot of you are going to get, oh my gosh, things are looking like they're turning on the 5.1. Things are going. There's a couple different things that I look at. The first one is my location of my large triggers. Guys, this may be a little overrun, but as long as those trigger lines are strong enough, I'm watching them, because a lot of times when those large triggers start getting above our areas, price comes back and at least retests. The other thing that a lot of new users miss in the beginning is that price has reached an area of support here, right? Price has reached that area of support. Absolutely none of the trigger lines have broken through. So what we're looking at right now is no more long trades. We have weak triggers. They haven't broken through. No more short trades. This is where newer users try to take one of those momentum style trades to the downside, and we've already reached a target. So just a little chart reading. When you've got that indecision right at key areas, guys, let that indecision go away. If it's really going to hold, everything's going to roll, and then you'll have a better chance. Yeah, Gary, the first two links are just pictures of the link. Here we go. 50-50 setup. What would a good market flow signal look like? Let's go to the instructions. So market flow signals. There we go. I'm going to give you the Sunday school answer first, and that's the one that tells you make sure that your rules are met 100%, that the advantages are in place, and then you're just looking for a little confirmation in an area likely to hold, right? So when the trend trade rules are true, you're looking for those arrows generated, magenta for shorts, green for longs. You're looking for an antenna bar, which is when the high volume area of the bar is away from the body of the bar, and you're looking for a yellow reversal bar. So then going into those, Gary, green arrows, magenta arrows at the area expected to hold, likely to hold. And then you have a yellow signal bar, tail going down, yellow, green dots for longs, magenta for short, after the rules are met 100%. And then you have antenna bars. For long trades, that high volume area is below the body. If you get a stranded seller, a magenta dot at the bottom, it's even more powerful. And then go in the other direction. There's one of those antenna bars for a short signal. So if we look at your picture, Gary, you had an antenna bar off of the HVA line that lines up with the area likely to stop the market on a 50-50 trade. Does that make sense? Take a second and go through and study those signals just so that you know exactly what you're waiting for. And remember that it has to be at an area. Like this is a green up bar, right? There's no long trade. Ignore that signal. But this is a down bar with a magenta signal above it, right at that mid band at large triggers. And that's okay. Study and go back and see what you think. All right, Sophia, let's see what you got. Oh, that is so much better. I love it. Thank you so much. So let's go through, and I'm going to see if I can make this a little bit bigger. Dun, dun, dun. If I open these up a little bit bigger, we can come through and take a look at it. So we saw the 13.2, trading with direction, trading with momentum. And on your 5-1, here's your first pullback directly to an area of support inside of favorable large triggers. Sophia, absolutely beautiful. You took quick profits, and then you get the second divergence, and it looks like that gets you into your next stop out, which is going to be right about here with that odds favorable momentum. So when I look at this from a management standpoint, everything still says up, target not reached, small outside of the large. This is one where you have the potential to hold without a doubt. Everything still says up, haven't reached, small's outside. You take that exit, and then it pulls right back to the mid band. So good job, heads up, getting back in. Then you take profits at the spot, and then you get that divergence again. You're starting to see, looks like you hit your 1-to-1s at 65.79, Sophia. So that for me is a termination condition right there at 65.79, which is right about where everything shut down on you on the 5-1 as well. See how we reached 1-to-1s, absolutely no trigger lines go through, and then you couple that with some divergence, small triggers inside. That's a great indication that the party's over. Does that make sense, Sophia? I love everything about this trading. I love that you got back in. But remember that you can identify those areas where the market's likely to stop. And when we hit them, no triggers through, and you start to slow down, there's no reason to give quite that much back. Good job. Great trading. Dab trading directly into that termination condition. Pivot from nowhere. Pulls all the way back. Small triggers not through. You take the best entry. Your zero loss, get some profits. If this thing decides to run, you're in a great position for it. If it bounces back, you're not losing a penny. Very aggressive. Your target's already reached. That's one of those hope for the best. That's one of those ones, Dab, that might work a couple times, just enough to get you to break your rules. And then guys, here's one of those instances right here in the live market. I love this. Remember we talked about weakening triggers a little bit. Smalls are coming back, and there were no areas inside of favorable large triggers. Does everyone remember this look? And we're like, well, that's not the best entry, right? That's not exactly what we're looking for. So Everything says down. Area is likely to hold. If you waited for those small triggers to roll to get in the direction of the trade, guys, there is your 3 triggers in the right direction. And if you look at, you get a better color here. If you look at the mid band and then you look at the entry, you'll notice that they're kind of in the exact same spot, right? So you see that a lot. If you take the first trend trade, or you say to yourself, man, these are falling outside, I'm not exactly sure where it's going to, I'll let the triggers roll and then I'll look for continuation. Do you see how that happened? Give me a Y in the room, guys. This is your opportunity to not miss the trades when the conditions aren't perfect, or when the conditions are perfect and they just want to get a little silly on you. Great opportunity right there. Everything in the direction. And then that's one of those trades that you're going to see every now and then. You're going to have the rules met. It's going to come through. Then you've just got to kind of wait. What do we see now? We see smalls below the large. The large are wide. They're angled down. We've cleared all of our support. It's now beginning to act as resistance, right? Smalls are outside of the large on the 5-1. It's a pretty good look. And if I had to, right now, gun to my head, pick a window of opportunity, right about there. Gary, let's see what you did. And Gary, you've already posted this one. We can cover it again if you like. I think you held on to that link. I do that all the time. Post the wrong one. Just now on the ES, Ben. In and out, right? Everything says down, so why not go down? There we go, Gary. Exactly what we just talked about, right? Losing momentum, it pushes up higher. If you're not willing to guess, Gary, there's a market flow signal directly from those 1-to-1s if that was your trade. If you wanted it to be a little more conservative, there's your pullback to the small triggers right at the mid band with every trigger line down. And then it pulls down, pulls right back to a mid band. I'm not sure that those timestamps line up. That would have been somewhere right over here where you appear to have lost an awful lot of advantages and the market went down anyway. 31, 31. So this loss of momentum pushes you all the way back to a high volume area, right at resistance, right at 1-to-1s. And then there's your second chance right there. This one, Gary, just because it went down, you had already lost all your advantages. You lost momentum, right? Smalls on the wrong side, divergence had printed. Every now and then, you got to let one go because you don't have the advantages. John says down, down. This is a mental challenge for new users to take the short again, so context helps, right? All triggers down at the mid band after the divergence. Everything says down, just like we talked about. Nice job. John Novak just kind of reiterating the lesson that we just put in there. This morning's long was the same thing, right? Everything says up, all's good. If it doesn't work, and some of them aren't going to work, all 3 triggers in the direction of the trade creates an opportunity. And then he's just putting that picture in one more time for you guys. Good lessons, right? Where can you find these lessons? Well, when we're not watching the live market, when you're hanging out, these chart reading pictures put in here by John Novak, there's probably 200 pictures of patterns that repeat themselves over and over and over again. And I guarantee that continuation picture is in there. Pictures of 50-50 trades are in there. Pictures of entries, pictures of exits, pictures of divergence, pictures about everything. And then John says, watch this 5-minute video on triggers. Gives you a great idea on continuation. Guys, sometimes they don't give you the entry. And that's okay. Second guessing everything and not trading, Gary. I'm going to address that, but I'm not going to address you personally, Gary. I'm going to talk to everybody in the room based on my history with teaching this class, with talking to traders, to working with people that are right on the cusp of figuring out everything that they need to figure out. You'll go from a point, okay? You'll go from a point where you're focusing on this absolute best of the best, guys. 30 days and beyond. You're looking for that high probability trend trade that comes after a termination condition. You are stone cold focused on following these rules 100%. You say to yourself, I'm brand new. I need the advantage. I'm going to take this trade. This is my only trade. This is all I'm focusing on. And then what does that high probability trend trade teach you to do? Well, it teaches you to read your charts, right? It teaches you to read your charts, and you start to see more. You start to recognize patterns. You start to see what you perceive as opportunities because of the patterns that you're looking at. And a lot of new users, their brains take them from trading rules to trading what they see. And it's a pretty normal part of the process. But when people trade what they see, they overtrade. They have 10 different checklists for 17 different things. All of the checklists become kind of subject to interpretation. And I'm not saying that this is where Gary's at, and I'm not saying that this is where anyone's at, but I've taken these phone calls more than once. Mark, I'm struggling. I used to take high probability trend trades. I was winning, and now I'm blowing out my account. Now I can't pass a combine. Now I feel like I'm struggling just to have the rules met. Guys, if you ever feel that way, it's okay to take a step back, to take a deep breath, and to kind of rethink what you're doing, to stop trying to catch everything and catch the best of the best. The reality is I haven't had anybody trade this checklist with any sort of consistency and not win between 80 and 90%. Period. That's it. Which means that if you're taking this checklist and even if you're only making $100 a trade because you get stopped out break even, do it 4 or 5 times a day. You'll be fine. You're at 87% in the last 2 days, Dab Chain. So it's possible when you have a plan to be doing what you're doing. And it takes a lot of humility to realize that if I'm not producing the results that I want to produce, something's probably changed. Either I'm fudging my entries, I'm taking risks that I used to not take. All these different things can become part of the problem. I always encourage people, if that's what's happening, if that's where you're at, just stop for a second, get back in, refocus on what's important, refocus on the advantages. Stop chasing everything. If my plan, ready? My plan is a high probability trend trade, an HVA trade, an edge trade, and a momentum trade, and a continuation style trade. And this is my beginning. And my win percentage is down. I'm not making money. I'm frustrated, confused, unsure, anxious. Guys, Just get rid of it. Just get rid of it and focus on the best of the best. And then when you're making money, right? Add in one. And then when you're making money, put in that next one. And you're at the point where you don't want to trade so you don't lose, right? Let me not save this. Guys, great conversations. And I think that this is the second half. We can teach you to read indicators all day long, right? We can give you the idea on your rules, what they should be. Joel, excuse me. Couple things you have to accept. Normal losses are a part of the upward equity curve. You have to lose. Nobody wins 100% of the time, guys. I don't care how successful you are as a trader. Nobody wins 100% of the time. You have to believe that you don't know what's going to happen. You remember the shark picture? It doesn't matter what I do. I'm not in control of the market. I have zero control. I can't compete with these guys, not even a little bit. But what I can do is take a trade that fits the rules that's been determined to win more than it loses. And using those 20 to 25, right? You have to be ready to give 30% of that away. You have to understand the risk, get rid of the panic, and your rules eliminate the need to know what's happening next. Just follow your rules and stop believing you know what's going to happen. Go into that mechanical mode, guys. And if your rules aren't met, don't trade. But I like this one right here. When you stop expecting to win every trade, you start winning most of your trades. You don't care about the result. You care about the execution of your method because your method has been proven to win more than it loses. So Joel, if you're worried about losing right now, and this is for everybody, make sure that the only trade that you're taking is the one that's been proven to win more than it loses. And I can tell you there's this amazing sense of calm. Your palms stop sweating. You don't feel anxious. And you're more worried about your rules being met than you're worried about winning the trade. And John used to tell me that, and I thought he was full of crap, guys. I'm not going to lie. Absolutely thought that he was a yahoo for it. So do it right. Do it on sim. Prove to yourself that you can win by taking those best of the best trades. Every time you take a trade, post it in class. Guys, I took a quick picture of the market here on the S&P because there's some really key things that I want to point out. Then I'm going to take a little bit of break, and we're going to come into the last hour strong. Price reached an area of support, right? Absolutely no trigger lines broke through. What do we call this, y'all? Anybody? It's a rock wall. I like that. Which rule hasn't been met? Does anyone know it off the top of their head yet? It's a good bottom. Could be. Guys, it's a termination condition. No more short trades. Rule number 2 is not met. Price reached resistance. Absolutely none of my trigger lines broke through. Guys, it's a termination condition. Rule number 2 is not met. What does that mean? Stop trying to be first, right? Stop trying to be the guy that predicts everything. Paul said, here comes the snapback. So let's do another lesson. These large triggers are more than a full bar away. And I know that they're more than a full bar away. Whoops, that's too small. Because they're below this reversal marker, which means that price has room to create a reversal bar and maybe even more bars. We talked about this earlier. If price pulls away from the synthetic triggers too fast and far and into a Fibonacci area, it'll snap back to the triggers. Guys, this space between those large triggers in that Fibonacci area is like a vacuum. It is like an absolute vacuum, and more times than not, price closes that gap. It lets me know not to go long, and it lets me know that I can't go short anymore because of termination conditions. Guys, this is 90% of what we do is reading the indicators. And look at that. While I'm flapping my gums, look what it did. Pulled right back, right? Did it keep you from attempting a momentum style trade without divergence? Did it keep you from trying to go short at the mid band? So what has to happen? Now we play if then. This is a great looking bottom, isn't it? And from a great looking bottom, if everything breaks through this area with odds favorable momentum, we'll look for a high probability trend trade. Or everything will have to roll and break the area. Dap chain, trying to get through a key termination condition, right? So you're 50-50 on that divergence high. You have no divergence, strong triggers, small window of opportunity. Quick profits, looking to get up to that next area. Notice that your 34 is on the other side of one-to-ones. Something to think about. It's rules-based, isn't it? Joel, absolutely termination condition. Textbook termination picture. And there's a couple things that you'll notice on this one. Price doesn't reach the key area, right? Pulls all the way back to support, all the way back to the mid band, and the large triggers don't follow. I get a full reversal bar up to those triggers, and it continues right to the key area. Gotta let it break. Joel, that's a great picture of a termination condition. This is a picture that you could even steal the screencast account and put it in here. Put it in your spreadsheet. Recognize these over and over, right? This is a term. Now I can just go back and look at it. One more picture to fuel the fire. Paul, smalls above, everything's moving up, no divergence, nice entry. Just didn't work out. That's a good looking trade. And then Paul showing us the most important name, and this goes back to what we talked about, trusting your rules. This is a termination condition that creates a full reversal. This full reversal gives me odds favorable momentum. Rules 1 and 2 are met. No divergence, window of opportunity, and then even on his 8 range, everything set up. Just didn't work out. Paul says next. He says this one helps me win more than I lose. This one, 70-80% of the time. I'll take it each and every time. Paul, great looking trade, great entry. Sorry that one didn't work out, but hey, we don't control the market, right? The S&P is trying to work through some stuff. That 50-50, no divergence. Hit those one-to-ones. Everything's continuing up, right? Now you've got 3 triggers in the direction of the trade. Has anyone been studying that continuation style? Jonathan, you enter on the snapback. Good termination condition. Notice how it closed the gap to the large triggers, Jonathan? See this pattern over and over and over. It can help you keep from getting in too early. Let it come back. Let it close that gap. And then maybe look for an opportunity. It's a little aggressive, but it's a good read on what's likely to happen after such a great termination condition. Nice job, Jonathan. Never gave us that pullback entry, did it? That's a tough one, because if you move your stop, it just taps it and goes. 50-50 trades, guys. There's going to be a fight. You're welcome. All filled, dab chain. Good stop placement. Good stop placement and trust in the move. It's hard to do sometimes. Nice job. Guys, I'm going to take a few minutes. I'll leave you with crude oil. Odds favorable directly into 1-to-1s, right? I'm going to let you guys watch this one. I'm going to take just a second, reload my water again. Got to stay hydrated. Last hour, I'm going to put it on you guys. If you are brand new, I want you to post a question. Don't care what it is. Maybe it's about how to enter the market. Maybe it's about putting in stops and targets, scaling your charts. It can be, what is John Novak like for breakfast? But if you're brand new, I want you to find a little bit of courage and post in the room and ask me a question. Even bonus points if you put it on a picture of your charts. Doesn't matter what it is, guys. Go to your favorite website, take a picture of the cutest puppy you ever saw, post it in the room, post it with a question. Build that habit now, that it's okay to post in the room, that it's okay to ask questions. You're going to get the feedback that you're looking for. Guys, I'll be back in about 5 minutes, and we're going to finish this last hour strong, but you guys are going to drive it. You guys are going to tell me what we're talking about. So start thinking about it. Post it in the room. Back in a minute. All right, guys, last hour, here we go. Nexgen Ben, he eats crude oil with a dash of the S&P on top. You're probably not wrong. Guys, here's a great picture. John just put this in there. You see a lot of times people are posting their rules on the charts, and they're putting that checklist on there. If you're using text capture, you can't quite do that one. But if you are using Snagit, and guys, if you're going to do this, if this is your chosen profession, the thing that you're working towards, it's pretty simple. You'll take a picture of your checklist and you can literally copy, paste, click and drag. You can put your rules on there. Really, you can superimpose anything that you want to superimpose on there with the Snagit. It's a simple click and drag, or you can right click and copy and paste it right in. But I think just dragging and dropping is a little easier. So save that picture. Snagit is $63, I think. I don't even open capture software except to talk about this in the room. But this is a great way to hold yourself accountable. Hey, Mark, did I have a long trade here? Well, let's look. Were your rules met? Did you put your rules on your chart? Did you follow the rules? John C., let's see what you're doing. Termination condition, odds favorable momentum. John C., this is one of those 50-50 looks where the area has the potential to break but hasn't broken yet. And you have identified picture perfect area. Oh, right here, not yet. Not a good entry yet, John, because we're coming right back into this area of resistance that just held with all the trigger lines below. So a little termination condition there. But you'll notice, I'm going back and forth, when everything begins to break, you can start identifying those areas of support inside of favorable large triggers. Gives you a much higher probability look. And then let's go back over to it and see what happened. 50-50 look, couple divergences, and it ends up pushing lower. This right here, John, there's just not enough information to really give you the advantage. Not quite yet. Does that make sense? Absolutely. And you'll notice how we have the momentum, we have a strong bottom, we have a couple losses of momentum, which lets me know that it may push lower. And it made it right to the bottom of that window of opportunity. If you're a 50-50 trader with divergence, oh man, John, you're going to be practicing for the next 3 years. I'm still practicing every day. I'm still looking for a way to do this better, to be more consistent every day. Never stop learning. But notice how it snaps right back to the areas inside. This is how we find our best of the best entries. And then as you learn to read your indicators more and more, things like a slowdown through divergence helps you make a more educated choice where in that window it's most likely to go to. And we'll keep talking about these each and every day. Finch, it looked like trouble, so you managed out. All right. Finch, which part looked like trouble? Let's go through this. Are you ready? Because, man, I like this look. Great termination condition, right? And then you get another one. Resistance holds, large triggers don't follow along, everything rolls. And now you have a 50-50 trade. You enter it, looks like with a market flow signal, catching it from that lowest point. So Finch, what I like to do is I like to identify what's my first trouble spot. Well, my first trouble spot is going to be that potential divergence low, right? That's going to be the first spot that's probably going to give me a challenge, if it's going to give me a challenge. But when you take your exit, I like looking at this. You have odds favorable momentum in a downtrend from divergence at resistance. You have every trigger down, everything says down, and now your small triggers are rolling down too. Finch, not a horrible look to maybe hang on. Get to a zero loss level, right? If it pulls back, taps resistance and goes, you're good. If it comes up, you're not giving anything back on that 50-50. But at this point, with the small triggers rolling, you're starting to get just a little extra advantage going on. All the triggers aiming the exact same way. Hopefully that makes sense. Good management picture, right? Starting to get all three triggers in the direction of the trade. And then guys, there's that 50-50. On the same concept, if you took the 50-50 from the lowest point in the window because of divergence. Give me 1 second, guys. I'm going to type for a second. There you go. So John C., do you see how this one worked out too? Termination condition creates a full reversal, gives us odds favorable momentum. Then we get this 55 area with the potential to break. Look at how far outside of the large the small triggers are. But because of these two slowdowns, two losses of momentum as it's working up, when I identify my window of opportunity, and guys, this may not be your trade as a brand new user, but let's talk about it. There's my window of opportunity. We're going to take a picture here. And if I say two divergence with strong on both charts, most likely entry is the bottom of the window. First trouble spot, divergence high. Didn't even come close to spelling divergence on that one. Is everybody with me on this? There's the top of the window. There's the bottom of the window. And that helps out. And if you got in at the bottom, everything rolls and off it goes, guys. And then Finch, what I was saying for you now that you have audio, you had all of these advantages coming in and your small triggers were starting to roll. Identifying that first trouble spot, maybe getting to a zero loss level, but giving that momentum and opportunity to take you down to the next levels. And then like John said, if you got in at the early spot, you have to use a bigger stop, don't you? Because you have to go where the market shouldn't on your stop, not the best. Then there's the best. And that thing's cranking up. John, nice job. Nice trade there. Notice the exit at the first trouble spot. All three triggers in direction. He's holding with that momentum. You're welcome, Finch. And now here we go. Smalls outside, little loss of momentum. If you are looking for continuation, there's only one spot to potentially do it, right? Losing momentum on the 13.2, losing a little bit of momentum on that 5.1 with a divergence. Let's see how this one plays out when the triggers return to the large. Smalls are still kind of on the outside here. Coming from a great termination condition. Haven't reached the key area yet. See what happens. Guys, what do you want to talk about? Let's talk about Dave B's chart. Dave B, awesome stop placement. Picture perfect, just like we talked about. Stop has to go where the market shouldn't go. Guys, that initial stop of 12 ticks has an 0150 stop all the way down here. Beautiful trade, Dave. And he even used a 21 chart. Look at this, termination conditions everywhere. And that market goes. Safia, you going to show me the same thing? Yeah, you are. Your entry is beautiful. Do you know why? All right. Safia, we're going to go yes and no. So let's do this. Are you using Snagit or are you using Capture? Snagit? Cool. So Safia, I want you to take this picture and put it into, take a picture of that picture and let it be in your Snagit bar here. And every time you take a trade, I want you to put this checklist on there because you're taking these high probability trend trades and you're doing it amazingly. And watch this. Here's the coolest thing ever. Is the market coming from a good top or bottom on the 13.2? So Safia, yes or no? I'm going to let you annotate your own chart here and let's get those answers. Yes? Perfect. Did you have odds favorable momentum? No termination conditions? Area with the potential to break, right? One of those 50-50s. So can I check this one? Feel good about it? Or should we do this just to create that awareness? Let's call it 50-50. And did you have an area for entry inside of favorable large triggers? What do you think, Safia? So you tell me. I'm going to get rid of all this stuff real quick. Safia, is your entry good? Absolutely it is. Do you see how we go from, hey Mark, is this a trade? To let me tell you why my entry's good. If this were a court of law, you just defended that trade 100%. And look at the result. And even though this is a 50-50 trade, right? What are the things? And this is one of those things that it's real important to understand. Situational, context. Beautiful termination condition, full reversal, everything says up, right? Stacked area inside of favorable large triggers. And I love this because the small triggers are so outside of the large. And like John said, even if you lost this one, beautiful entry. And that good Fibonacci divergence from the bottom made this a higher probability. Those strong triggers made it a higher probability. But you're in at 54. You took 5 there and 7 there. 12 ticks. Oh my gosh. What's 12 points? That $600? Not bad for 3 minutes of your life, right? Beautiful trade. So guys, get into this habit every time. Was it a good trade? Yes, 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 yes. Take that thing every time. You're developing trust. Beautiful. The only thing I don't like about that trade is that you got it and I didn't. And then there's that picture one more time. How to get that spreadsheet or how to get that picture in. Guys, we identified where the market had the potential to continue. It didn't quite get there, did it? But it sure did go up with odds favorable momentum. All right, same picture. All of my trigger lines are above this 77 area, right? Now my small break below. Large are still above the reversal bar. Awesome. Safia, 1275, 100%. Love it. It's never the teacher, though, Safia. It's always the student. You're an amazing student. Not everybody is at ease with being a student, right? But Safia, we gave a very specific path and you followed it 100%. And that starts with posting your trades in class, right? Getting feedback, making sure that you understand what you're looking for. And now you know how to put that checklist on there so you can begin to police yourself. Learn your looks, simulate your trades, don't practice the wrong trades. First full month with Nexgen, I love it. Simplify. Guys, I'm going to say it again today. Simplify. Thank you, Safia. I appreciate that. Fix your mistakes on market replay. Take those pictures, put them in class. And guys, just rinse and repeat until you get to where you want to be. Jonathan, not quite getting those areas. Trading off of the trigger lines. Cool, cool. So Jonathan, one of the things that I love to do is I like to ask, because remember guys, your plan doesn't have to be my plan, right? Your plan doesn't have to be. The only thing I like to ask is if you take this entry, was your stop down here? Because everything says up, everything's going up, right? But Jonathan, did you put your stop where the market shouldn't go initially? And this is one of the things that happens when you enter early, is I see a lot of people get stopped out right at the best of the best spot rather than putting their stop where the market shouldn't go. So if you're going to take this one off the trigger lines, just that little awareness. Stop still needs to go below the window of opportunity. Nice trade, Jonathan. And then Safia, we'll talk about that spreadsheet right now. Let me grab Dave B's picture. And then Dave B, did you get to see my little rundown on it? You were probably trading, right? Joel, you will get it right. I've seen your charts, Joel. You're 90% right now. Now it's just eliminating a couple things that don't fit the rules every now and then. That's the case for everybody. David, I took a picture of this one. Let me show it again because it's such a great lesson. Cool. You got in at the mid-band. With everything strong and up, these two divergents, the mid-band's great. It's the top of the window. You just have to be prepared for it to come down to the one-to-ones because of the pivot stop out here may push it just a little bit lower. So I think you nailed the entry. And your stop was in the right spot. And this little expectation based on the pattern gives you the opportunity to say, I really need to make sure that my stop is down here. I don't want to have it too tight on that area with the two losses of momentum. Does that make sense? Cool, absolutely. And then Paul, those jerks low ticked you. Yeah, I saw this one earlier. Great looking trade, man. And then they didn't give you a second chance. We watched this one happen. What it is they suckered you with the reversal bar, right? Put it down there. It happens. Those jerks. It's the sharks, Paul. It's always the sharks. All right, Safia, are you ready to use the spreadsheet? All right, so we're going to take a picture, right? Let me just grab one. We'll take this picture that says two divergent strong. It's a great chart reading picture. I'm going to click share, and I'm going to click screencast.com. So when I hit that screencast.com on this one that you can't see, it provides me that little thing that says get link. So I've got the screencast address on there. I'm going to go to my favorite looks, And I'm going to put this under chart reading things. So the first thing I'm going to do is I'm just going to paste. Boom. And you can see that it says screencast.com. Doesn't tell me what I'm looking at yet. I love that you asked this question. So the next step is to turn this so that I know what I'm looking at. I'm going to click Insert, and I'm going to click Link. Let me take a picture of the picture, and we'll go through it. We'll make a little cheat sheet, right? Paste into the chart, right there. Insert tab, click Link button. So we'll get some arrows go in that direction. There's your Insert tab. There's your Link button. And then screencast address and address bar. And then annotate trade in text to display. All right, let me give you this one real quick. There's the run through, so now we're going to do it, just so you have the picture of it. So I've clicked Insert, I've clicked Link. I can paste one more time. Whoops. Let me recopy this link. Click Link. Put it in the address bar like you're going to Google. I'll steal it from there. And then we'll call this 2 divergence lower push. And I'm going to click OK, and then I'm in the spreadsheet, Safia. And I put that picture on there to help a little bit. And the cool thing is when you do these links a couple times, you'll be able to right click and it'll default you straight to the link button. Excel will remember a little bit. You're very welcome, and if you need help with it, let me know. All right, Paul. It's slowing down a little bit, slowing down, pulls right back. You're trying to be very picky, but watch this one catch the bottom of the window with slowing momentum. And it did, didn't it? Went right to the bottom. And it looks like this was it right here. So you still had odds favorable momentum on the pullback. No termination conditions with everything up. Smalls outside of the large. It's all right to miss that one, but that was a pretty good look. And then dab chain. This is an easy day, or not sure what you're doing with that 3-minute chart. Big moves, easier to get. I like it. And then John says for him, once they hit the mid-band, which took out the last low, pivot, he went long. Usually 2 divergence here gives you a lower push. Rather risk an extra point a bit early than miss 10 points not being in. Personal preference. Recognize best entry spot, so we added on. Nice picture, Claire. Everything says up. You take the entry, goes to the lower one, and you make all sorts of money. You take that first one right into the vacuum, right? And it pulls right back to the large triggers, and you say, oh, great termination condition, I'm going up. Nicely done, Claire. And then one more from Claire. $13.2, large, Strong triggers, higher divergence, so you take kind of a momentum style. Little pullback, heads up, and you're out at the market open. Little different approach, but nice. Great chart reading. My favorite thing about this is noticing that all the triggers are going the same direction, that the backgrounds are the same colors, that the strength is in the direction of the trade. Guys, it makes all the difference in the world. It's when you begin to fight, it's when things don't line up, when they don't match up, that things begin to get difficult for you. Everything says go up, the market tends to go up. Everything says go down, that market tends to go down. Had a little momentum style pop right off of 47 with that odds favorable momentum. Right down. You ready? Ron got in here, he got out here. He got in about right here, got out here. I'll get to the point where I know what you guys are doing. I know the trades you're taking. I don't need you to annotate your charts. But if you are brand new, remember, give me that great information. Guys, price doesn't reach a key area, pulls all the way back to Fibonacci support. Does everyone see the vacuum again? Snaps right back to those large triggers, doesn't it? No reason to go short at this midband. Guys, give me a Y in the room if you see it. This is a pattern, not necessarily to get you into a trade, but certainly a pattern to keep you out of trouble. It's a good one. I'm not going long against strong triggers, always after the fact. Well, I guess that the key is, are you looking at it as an opportunity for a trade, or are you just reading your charts? Because for me, fighting strong triggers is never a trade. It's the old how to commit financial suicide, right? Trading against strong triggers, trading in determination conditions. So strong triggers, it just means no shorts or no longs. I'm not looking for the longs, but I'm not looking for an early short because I know price is likely to snap back and close the gap. And now we're going to see what's going to happen. It's either going to work its way back up or it's going to come down and retest with all that momentum. I don't know. I like not knowing because it means that I just have to wait for my rules to be met. Anything can happen, triggers, divergence prints, top of the window again. Paul, not in the window. It's going to the higher area, absolutely, but what constitutes a window? And this is for newer users. It's really for everybody, but what constitutes a window? A window is from the highest point of support to the lowest point of support inside of favorable large triggers. So there's an awesome window, right? Paul, you did a great job of recognizing that everything's said down, right? There's nothing in the way, but there is a slowdown. And that divergent slowdown means, well, it's likely to push up a little bit higher, and you've got a beautiful midband just waiting for it right there. That's all right. They're soaking it in. New users are soaking it in right now. Feels like you're drinking from a fire hose on day one, doesn't it, guys? You're like, oh my gosh, divergence and areas and holy smokes. But if you sit tight and you hang in and you listen for just a little bit and you start asking those questions, everything slows down. Who was it? John posted a quote from, I think, Tom Brady the other day. How everything feels like it's in slow motion after 25 years in the NFL. And new rookies feel like it's this huge panic going all over the place. And that's exactly how trading is. Eventually you get to the point where you create this recognition, you start identifying this long trade down here, guys. Most of my users with some experience started looking for this trade, I would say right when the small triggers got about right here. Right about here, they're going, all right, push just a little bit more, and this is what I need in order to take this long trade. And then it pushes up, and they start saying, man, just give me a reversal bar. All I need is a reversal bar. And it doesn't hit, and they start going, oh, give me another one. I've got my window. And guys, you'll start anticipating trades literally 5 to 7 minutes before they ever come to fruition, before you ever have to activate. John C., you don't need the 8 range chart yet. I like less noise too. So let me make this a two-part answer for you, John. You'll notice that I'm teaching on the 13.2 and the 5.1. This is how you're going to develop that foundation, how you're going to get that best of the best, how you're going to focus on your ability to read charts. And then you can make the choice. I love an 8 range chart. And honestly, I don't even have market flow activated on it. Not right now. I'm using it for trigger strength because I like a little confirmation of trigger strength. But what we do and what we teach really works on any chart. It works on any time frame, and it is doable on just 2 charts. And that high probability trend trade stems from just 2. Hey, Future Travel. Nice to see you in here today. Thanks for being here. I'm Mark. I teach the class. If you have any questions, do not hesitate. And that's true. Some traders use only range charts. And it's following your rules. And that's the biggest thing. Either the rules met or the rules aren't. So John C., if your goal is a 2-chart approach, then everything that we do together will be on 2 charts with a set of rules. You'll write them on the chart, and we'll keep you going on that. I'm a big fan of never say never, though, because I swore I would never use that market flow chart because it confused me in the beginning. And now I actually prefer to have it there. I like the information that it gives me. But I'm a couple years ahead of you, John. So you'll get there. You'll be right behind me. Without a doubt. All right, gonna pull up. I was just about to do that. Guys, if you go to the other traders chat area, these are people with anywhere from 3 weeks to 30 years. And what you're going to see is they're posting these charts that may not look like yours, right? Absolutely, John. Different ways to use the tools. It's kind of like if I give you a hammer, more monitors. Don't listen to him, John. John C., keep it simple. But if you go through this trading charts, you'll start seeing people, all these different people using different ways, different sets of rules that work for them. And they all revolve around using the Nexgen. 8 charts is enough. So look at the different looks, and it's kind of cool because what you're going to learn is what works for you. What you're going to be able to identify is where you're comfortable. John, I trade on a 14.5-inch laptop with a 32-inch monitor. You guys are looking at my 32-inch monitor. I've got Discord on my laptop. I've got another monitor, but my computer went full possessed today, so I'm going to have to fix that this afternoon. I love less is better. I am. Paul, we made it Saturday. We pulled into McMinnville, Oregon on Saturday. And it is cold. John says easy 5 points. Odds favorable. Coming from way beyond the areas, guys, this is an easy 5 points if you know how to read your charts. This is an easy 5 points if you understand the information being given you. You live near Sarasota. Nice. Do you play golf, John C? That's a surefire way to meet the CEO. Go play around with him. Guys, if we put John Novak's trade up and look at it, it's a termination condition, right? It's not an area inside of favorable large triggers. This is not a high probability. Not a high probability trend trade. Not at all. It's actually a little aggressive. But it's great chart reading. I would appreciate you guys not rubbing it in on the cold. And then John C. Oh, Jonathan. Termination condition, right? Area of support. Absolutely no trigger lines have made it through. Very aggressive. Nice management. Heading towards zero. Venice Beach area you live in, golf and country club development. It's called Heron Creek. Cool. I'm not sure where that is. I don't think we played that one. I was there a couple weeks ago. And it was absolutely beautiful weather. There we go. That's where I'm at right now. Welcome to the Pacific Northwest, guys. 25 and sunny. Jonathan, your entry was perfect in a lower probability trade. And I think it went great. You know what, though? The wind isn't blowing. I don't want to get used to it. But I'm going to go try and play golf anyway today. There is a 9-hole course. 10 minutes. I'm trying to talk the manager of the country club. I live literally a minute and a half from the country club out here. But they only let guests on if it's reciprocal. So wind is coming off the Siberian current. I don't even know what that means. Having grown up in Texas, Siberian current sounds like a metal band, doesn't it? -12 in Evergreen, just unfroze. Nice. Cold. Oh, okay, the cold water. I wasn't sure if that was wind or not. And those of you that are brand new, this is another great thing about what we do here. It is a community. You're going to get to know people. You're going to get to know names. You're going to get to recognize people's styles. I want you to focus on your style. I want you to focus on your trades. All the time, John C. Monday through Friday, 15 hours a week. My sole purpose in life is to get you where you want to be. I love it. We'll look at the live charts. The most important thing, John C., is I want to look at your charts, and this goes for all the new people. You're clearly not a shy person. Don't lose that. Keep posting, and it's the questions that you're like, man, I don't want to post that. Those are probably the ones that need to be posted. It's been the same recipe for 20 plus years. None at all, Joel? I do love the pictures, guys. Keep me busy. All right, so Joel, your job today. Are you ready, Joel? I'm going to give you homework tonight. I want you to scroll back every time there's a tail with odds favorable. And if it's a 50-50 with divergence and that's not your trade, that's cool. But go back and see if, without the emotion of the live market, see if maybe there were some opportunities that you feel really comfortable with after the fact. And maybe there is, and maybe there isn't. But one of the things that I really like to do, and I've done this a lot, is I'll go back after the day and I'll just do that little circle drill. I'll just do that little, let me double check Where were my tails? Did it fit my rules? And what I typically find is that I may have missed a couple. So I get to have that conversation with myself with absolutely no emotion involved. Hey, okay, this one was a good trade. That was a great looking trade. Joel, don't be. And it's okay to be if you are. Let me rephrase that. If you're frustrated, Joel, it's because you're looking for everything and you're starting to overthink it. Go back to simplicity. Trust me on this one. Go back to simplicity. John, it's good to have you here. Keep it simple, guys. KISS methodology, right? K-I-S-S. You know what the last S stands for. Keep it simple, silly. It doesn't have to be difficult. Let me show you the take the pressure off of you picture. You ready? This is from our market replay education routine. Nope, that's not the one I wanted. First thing you see when you join Nexgen, start simulation. Do it with 2 micro contracts. Joel, take the pressure off. Write out your rules using Nexgen guidelines. Guys, this is that example of a plan. Let me put it in the room for you right now. Upload it. Save it. Read it. Make it yours. Guys, I don't care if you steal this one and put your name on it. I'm okay with that. This is a crazy conservative approach to staying hyper-focused on the best of the best. On a micro contract, if you start and your daily goal is $40 on a micro, that's 8 points. If you start with an $800 contract and you're consistent for a month, you now have a $2,400 account. As you go into the second month with the same 2 contracts, that $2,400 becomes $4,000. The third month, proving that you're consistent, that same $40 a day, you've turned that $800 into $5,600, guys. You've proven to yourself that you can stay focused on the best of the best. You've asked for feedback. You've written a plan. You've stuck with the plan. That's $40 a day. And then bump it up to 1 big contract on the ES, right? I like 2, but 1 is fine. That same $40 a day goal turns into $400 just by it being a bigger contract. If you stick with that same conservative approach, $5,600 becomes $13,600, $21,600. And then after 2 months of consistency, guys, this is month 6, trading a 2 lot on the S&P, that same $40 goal on the micro equates to $16,000. Stop putting the pressure on yourself to find everything, guys. Look for the best of the best. At 2022, everyone came storming into the room saying not more trades, better trades, more contracts. I believe in that very much. Allow it to be simple. Allow yourself to be focused. If you're frustrated, you're probably chasing, right? We've all done it. If you asked every trader in this room, hey, have you blown out an account? Have you made mistakes? Have you deviated from your plan? I think everybody in here would probably say yes. And you do have to keep refocusing because you get bored. That voice in the back of your head starts telling you, man, you could just take this one because if it works, it'll be great. You've got to shut that voice up and say, hey, here's my plan. This is my trade. So Joel, that example plan came from a phone call with a gentleman that was frustrated. He called me and he said, I'm frustrated, Mark. I'm not where I want to be. And we came up with that plan together, and that's where that example plan came from. And he called me back 2 months later and he said, pardon my French, holy shit, it's working. Paul, great chart reading. Every area is broken. The market's trending down. Divergence prints, and you say, you know what? It's going to the higher area because of the loss of momentum. Virtually no risk. And the best part is your 8 range verifies that momentum. And if it didn't get there, no trade. And if it blew through there, you can have a stop right on the other side of resistance and everything, right? So John C., this is where I talk about that confirmation. You could take all of this market flow off and just let it be another momentum confirmation tool there. So nice job. And everyone will at least break one rule per day. This is the moment the day goes great or to poop. If you choose to never do it again today, your day gets back on track. If you keep breaking them mad or frustrated, you spiral and blow out your account that day. Mark, what purpose of a market that's going down in the red? Short trades, that's it. Walter, we're going to make money both directions. If the market's trending up, it's a smaller move 1-to-1. Walter, because of what we do, because of the futures, it's just not turned on in 7, Paul. You can make money if the market is trending down with odds favorable momentum and no termination conditions, just as easily as you can if everything is going up. And that's one of the beauties of what we do, Walter, is futures you can go long or short. You're very welcome. So when everyone else is worried about their 401k, Nexgen users are going short and making money. I was just going to get that pick, but there you go, Paul. It can, Z. It has the potential to. But let's go to the termination condition section, because there's a couple things that also happen when we're reading these divergences. That's the wrong picture. So Z, we start with 3 in the same area, right? That number 3 tends to be the one. We're also looking at trigger lines, whether they're small or whether they're outside or inside. And another thing, and this is what's happening right now, is all of our trigger lines have already broken these. We've already gotten beyond these, so we're kind of resetting as we come back through. There's a point, just like we consider an area broken when everything gets to the other side of it, we'll consider a divergence broken when things get to the other side of it. Does that make sense, Z? So right now we're identifying this loss of momentum, and now there's our first one going in the other direction. Now not only did we lose momentum, but price couldn't exceed the previous pivot. So Z, this comes into that chart reading, putting yourself to where you're like, okay, these keep going down, my small triggers are outside, it's probably going to keep pushing down. And now we start to see a little bit of change. Now we start to see that higher pivot. They're all coming in that same general price range, but the smalls are still outside. It may still have one push in it. But as a general rule of thumb, 3 in the same area may push it up, especially when the smalls are inside. But when everything has momentum down, these smaller chart divergences can break. So I like to watch the trigger lines a lot. We're still outside of everything. So we're aware, but it's not a deal breaker yet. Does that help a little bit, Z? And you can see what the market did with those small triggers still outside. Absolutely. Can't stress it enough, guys. Chart reading is what we do. And you'll be absolutely amazed at how well you'll be able to read your charts. And then I think John just made a picture kind of reiterating what we said. Small triggers are still below the large. John's saying there's no way I'm out of this trade. And right to support. Nice trade, John Novak. Guys, we made it through the day today. Great participation. Those of you that are brand new, thank you for being here. I hope to hear from you more tomorrow. If you're brand new, those of you that are still learning, I love your pictures. Those of you that are frustrated, regroup, okay? Recommit to the best of the best. There's that plan one more time for you. Start policing yourself. Start focusing on those best of the best trades and see what happens. And guys, it may sound a little bit, I don't even know that it's arrogant. You're welcome, Indu. I've had people tell me, man, Mark, I'm struggling. I'm not winning. My percentages are poor. I'm frustrated. And I've never had anybody follow this checklist on every trade they take and do less than 80% winners. So now it becomes a question you have to ask yourself. Am I really ready to commit? Am I ready to stop playing around? Am I ready to focus on the best of the best? If you don't have a methodology that's producing results yet, it doesn't have to be the high probability trend trade. Then this can be your focus for 30 days. 57, yeah, bragger. I'm up to 27 now. And Z, more often than not, when you still have those strong triggers on the 5-1, coupled with the strong triggers on the 13-2, John's going to put it in a multiple chart context for you here. Says down, says down, says down. Hold that short. Great trade. So if you're frustrated, guys, commit. Commit, commit, commit. Get that high probability trend trade checklist. Knock it out. And I'm going to give you one more, okay? Guys, here's a high probability trend trade checklist that has pictures of what each rule means. I'm going to put that one in the room for you too. Guys, I take so many pictures. I want to share every one of them with you. I upload these every day. Paul, I don't know. You'd want to ask them. I don't think they're that big, are they? They're probably pretty realistic. It's okay. Focus on the right trades. You won't worry about commissions. It just depends on your broker, Paul. That's almost like asking how much is a bag of groceries, right? People used to ask me, how much does a tattoo cost? I can't answer that. But I think $3 or $4 a turn is pretty normal. And guys, there's that termination condition that creates a full reversal. And now, doesn't this look a lot like that? Patterns, guys, over and over. And all you have to do is be patient enough to wait for your rules to be met. All right, that's it for me today. Guys, I'll be back tomorrow morning, 9 a.m. If you need anything, you know that my email works.